So welcome back to this channel. Today I'm going to show it to you guys the importance of using heikanachi candle along with your trading. This works so well, as in it filters all the noises on the chart. It helps you to know when the candle has closed, when it opened, and the right candle for you to choose. If you apply high Kanachi candle with the daily charts, then you move down to a smaller time frame and look for your entry. You will see how effective is this strategy. I'm trying my best to make sure that I bring the strategy that works to this channel so you can learn and also make money from it. But if you want to learn the way I trade personally, you can check me on my Telegram channel. The link is on the description of this video. You can check me out. If you want to learn the way I trade personally, if you want to know the way I trade personally, you can link me up, because I'm not using all the strategies which I taught on this channel, but I choose what worked for me and I stick to it. So if you want to be part of my students, you can check me up on this channel by using my Telegram link below. You want to join my VIP, my signal group, you can as well check me up. So let us go to the chart. Let me show you how you can implement this, how you can apply structure heikanachi down to a smaller time frame for you to have a better and a realistic win rate which you can rely on. Let's get to the chart. Do not forget to subscribe to this channel. Okay, right now I'm on GBP Chief daily chart. So first, for this strategy to be very effective, you have to turn your chart from the normal candle to an heikanachi candle. So you click on your candle, you scroll below, scroll down, you see heikanachi, you click on it. Once you click on it, all the candle will turn to heikanachi. It will turn to another candle style. So this style of candle you are seeing here is what we call heikanachi candle. So therefore, we have to mark the structure in this market. So we have to mark the structure of this market before we do anything. You note one thing they always say is that wicks doesn't lie. So we are going to be focusing on the wicks, and that is to say our daily structure, the wicks of the zones, and our TP. We can have fixed TP for this. We don't want to know how the market run, just that we have our fixed TP. When we win, we win. If we lose, we leave the market. So we are going to check this from our daily chart to 1 hour chart. So let us mark the trend of this market. We've seen that this market is bullish. We've seen that this market is bullish. For heikanachi to be effective, you need a break with the candle. You don't need a wick. Okay, we've seen that this market right here has broken structure from here, rallies to the upside. If we can mark this place right here, if we checked here, we've seen that there is no candle that closes above this high. There was no candle that closed above that high. So that is to say that here is the zone that led to that break of structure, this very one here. So for that case, we have to mark the wick of this zone. We have to mark the wicks of this zone, which is right here. We mark the wick right here. That is the wicks of the candle. So we marked it. Now, after which we have marked the wick of this candle, it is for us to turn to our H1. This is very simple to follow. It is for us now to go to our H1. So let's go there together. Do not forget to subscribe to this channel. Turn on notification bell for more tutorial videos to come. If you want to trade the way I trade, you can contact me through my Telegram channel. If you want to join my VIP group, that is my Signal group, you can as well contact me through my Telegram channel, which I will leave the link of the description below this video, so you can contact me. I've dropped a lot of tutorial videos on this page, but that doesn't mean I use all of them. No, I have to choose one that works better with me and I make it my own. So if you want to trade the way I do, you can contact me. So let's get straight to the point. So there is no candle that closes above this very wick here. None, except this one right here is the one that finally closes above this wick right here. So for that, we have to move to our H1, because here is the zone that breaks structure to the upside. You see, we had a zone right here and we had a BOS. So let's name that place BOS. We name here BOS. So the zone that lead to break of that structure is this very one. So let's go to our H1. Okay, right here, here is the zone which I marked on my daily chart. Here is the zone that I marked on my daily chart. And here is the market that came into this zone. So market came into this zone. As market came into this zone, we are looking for something. This is on my H1. We are looking for something. As this market come into this zone, it came in with this bearish candle. We are expecting a bullish candle out from this zone. But what happened is that the market came in with a bearish candle and it wicks. It wicks. You can see wick from this zone with this candle. We don't want that. We want, if the market come and close inside this candle, we need a bullish candle from this zone to the upside. That is what we need. We need opposite candle from this zone. We don't need it out from this zone. We need it inside this zone for it to appear, for us to take the market to the upside. So we've seen it here. It happens here. As the market come into this zone, it wicks before, then it closes inside again. It closes inside again before this opposite candle that still open in this zone, not outside this zone. It opened in this zone. You can see the opening. The opening is right in this zone and it closes right here. And the entire body of this candle is still inside this zone, which indicates that the next candle that will follow this candle will be bullish. So as this happens, we place our trade this way. We take our long tool, we place our trade this way. Our stop loss come a bit below this low or below the candle. It depends on you. Your stop loss can come below the candle or below this low. So that is the two things. That is it. So your target will be 1:20. 1:20 will be your target, or you target this first high which the market come from, which gives you 1:14 already. You go for your 1:20, which is right there. and the market finally hit 1:20 right there. The market hit 1:20 RR right there, and it keeps going up. We don't care about it going up. We just want our 1:20 RR, and we are out from the market. So let us look for another pair. Let's just choose a random pair and check if this we can still see this setup. So this is a buy scenario. Let us look for a sell scenario. Let's just use a pair like Nasdaq, no, Dow Jones. Let me just use the Dow Jones. So let us just use a pair like Dow Jones. So let's go to our daily. Let's go to our daily. First, on our daily, we need to mark the structure of the market. This is Dow Jones, and we see that this market is breaking structure to the upside. This is daily. It's breaking structure to the upside. And we mark this week here. We expect the market to come inside this week. We have a week there, and we have another one right here below. We have another one week right here below. So we have a week here. Let's check what happened with this week right here. Let's check what happened with this week right here before we move to the bear scenario. This is a bull scenario. So let's check. Let's go to our 1 hour. Let's check what we have here. So this is the leg. This is where we marked. So this is where we mark on our daily. This is the entire week that we marked. You can see these things which I drew there. So that was the entire week. So let us see what happened. So we've seen that the market came and closed inside this week. And then a bullish candle occurred still inside this week, not above this week. This is the candle that occurred inside this week, not above this week. It opened right inside this week, inside the zone, you can see. So we are going to place our trade at this candle, and we target 1:20. This is Nasdaq. You target 1:20. Your stop loss either come below this green candle or it come below the bearish candle. It depends on you. So if you want to choose the green candle to be your stop loss placement, then you should be targeting 1:30 or 1:25, 1:30. But if you choose the red, then 1:20 should be your target, and you are done. And you've gotten your 1:20 right there. The first pair I was using was GBP Chief. The second pair which I'm using now is Dow Jones, which is Nasdaq, I think. So this is Dow Jones, a buy scenario too. So let us check for a sell scenario. Do not forget to subscribe. So let's go to my daily chart again. Let us look for a sell scenario. First, we should mark the structure of the market. Let's look. Okay, we've seen a break of structure right here to the downside. The market has taken this structure to the downside, and this zone was still fresh because there is no candle that comes inside this zone. So let us mark this zone. So we mark the wick of this zone, which happens to be here. We mark the wick. So that is the wick. Now we have to go to the future, thereby us going to our 1 hour and expect the market to come inside this week. Once we come inside this week, we are expecting a bearish market. We are expecting a bearish candle to happen inside, not outside. It has to open from inside, and has to open. Part of the body has to close, has to be inside this week before we can do anything. So let us go to my 1 hour chart. Do not forget to subscribe, guys. So this is my H1. This is my 1 hour chart. And this is the week we mark on our daily. And let's check. So we've seen that this market came. The market came inside this week. You see, the market came inside this week. And then it gave us a bearish candle. And what happened? Look at this bearish candle now. This bearish candle happens to be below. You see the entire body. There is no body of this bearish candle that closes inside here. So if that I place trade, I place this trade, this would have been a losing trade. So I just came here to say, let me show you guys something. The reason. So if I place trade right here on this candle, you see this candle just weak the zone and it closes. So none of this candle body was inside this zone. So if that I've taken this trade, this will be a losing trade for me. You get? So the same thing happened. The market comes back again and closes inside this zone and still don't, the bearish candle we are expecting still not inside this zone. So it's still outside. So we did not take this trade. So if you are to take trade, you should watch well, follow the rules. This is why I said, let me check this zone, and you guys see the difference between the two scenario in this very one. So that is it for this tutorial. If you haven't subscribed to this channel, what are you waiting for? Do well to subscribe to the channel, turn on notification bell for more tutorial videos to come. If you want to trade the way I do personally, do well to check the link on my description below. You will see my Telegram channel. You can as well join my VIP. If you want to join our VIP, you can do that through my Telegram link below. You can contact me if you want me to coach you on how I trade. Check the link on the description. And you can contact me through my channel, my Telegram channel. So I remain Aqua FX as I sign out. Peace.